70% of SBA loan applicants get rejected, not because their business is not strong enough, not because their credit score is too low, because of one single, completely avoidable mistake that happens before a human being ever reviews the file. I'm going to tell you exactly what that mistake is. But first, I need to tell you something about SBA loans that almost nobody explains up front. Something so fundamental that if you miss it, everything else you think you know about this process is built on the wrong foundation. In this video, 5 truths about SBA loans that the bank is not going to walk you through at the application window. Truth 1 will change how you think about what the SBA actually is. Truth 3 is why smart business owners keep getting blindsided by the timeline. And truth 5, the one with a lock, is the reason 70% of applicants fail before a human ever reviews their file. 5 truths, let's go. Here's the thing almost nobody tells you before you spend weeks trying to apply to the wrong place. A small business administration does not lend you money. Not a single dollar. The SBA is a grantor. They back a portion of the loan, which reduces the risk for the bank, which means the bank can offer you better interest rates and longer repayment terms than they otherwise could or would. You are not applying to the government for a loan. You are applying to an SBA-approved lender, a bank, a credit union, or a community development financial institution, and the SBA is standing behind that loan with a guarantee. The SBA has a free tool at sba.gov called Lender Match. You fill in some basic information about your business. It connects you with SBA-approved lenders in your area, lenders who are already set up to process these applications. That is your starting point, not the SBA directly. Not a general Google search for business loans. Lender Match, sba.gov. Write that down. That guarantee, up to 85% on certain SBA loans, is what unlocks the better terms. Lower interest rates, longer repayment periods, lower down payments in some cases. None of that happens if you apply through the wrong channel. Start right. Lender Match. Ask most people what an SBA loan is, and they will tell you about the 7A. The 7A is the flagship product. It is the one most talked about. Goes up to $5 million, works for a wide range of business purposes, and yes, it is excellent. But it is not the only option, and for a lot of business owners, it is not even the right starting point. The SBA Microloan, up to $50,000, is administered through nonprofit intermediaries. And here's why that matters. Nonprofit lenders weigh character, business viability, and community impact differently than a traditional bank. If you've been rejected for a 7A loan, or you think your credit history is not strong enough to apply, you may still qualify for a microloan. This is not a consolation prize. The microloan program has launched thousands of businesses that would have been turned away by every conventional bank in the country. Know which product matches your situation before you apply for anything. Here is the moment where otherwise well-prepared business owners get absolutely blindsided. SBA loans are not fast money. From the day you submit a complete application to the day funds hit your account, plan for 60 to 90 days minimum. Some applications take longer. The SBA process involves underwriting at both the lender level and sometimes at the SBA level. Document reviews, site visits, back and forth requests for additional information. If you need capital in 30 days, an SBA loan is not your answer right now. That is not a criticism of the program. That is just the reality of how it works. Smart business owners plan ahead. They apply early, before the capital is urgent, and while the SBA loan is processing, they pursue a short-term bridge solution if needed. Lines of credit, invoice factoring, revenue-based financing. Not ideal products for the long term, but they keep the lights on while the SBA process runs its course. Apply when you have runway, not when you're running out of it. That timing shift from reactive to proactive is the difference between the SBA loan saving your business and arriving too late to matter. If this makes sense so far, feel free to leave any questions in the comments and make sure to like and subscribe. Now, we're halfway through this video, and I want to be direct with you. The first 3 truths we covered, they matter, but they are the setup. Truth 4 and Truth 5 are the ones that will actually determine whether your SBA application gets approved or whether it joins the 70% pile. Stay with me. These next 4 minutes are the ones worth waiting for. Here is something the financial system almost never tells you, and it changes the game for newer business owners, immigrant entrepreneurs, and anyone who does not fit the traditional lending profile. SBA lenders, especially microloan intermediaries, do not evaluate your application the same way a traditional bank does. They weigh your business plan, your character, your track record of reliability, even outside of formal credit history, your community impact. This is not a soft evaluation. It carries real weight in the decision. A first-generation business owner with a 640 credit score and a detailed, well-researched business plan can outcompete someone with a 720 score and a thin, generic application. Because what microloan lenders are ultimately asking is, does this person understand their business? Do they have a realistic plan to repay this? Do they have skin in the game? A strong business plan answers all three of those questions before the lender has to ask them. You do not need a consulting firm to write this. You need clarity. Lenders can tell the difference between a business owner who wrote their own plan and knows it cold, and someone who paid someone to write something they cannot explain. Know your numbers, know your market, know exactly why the loan makes your business more viable. That clarity is your competitive advantage. Here it is. The one thing that trips up 70% of SBA loan applicants before a single underwriter reviews their file: incomplete documentation. Not a weak business, not a bad credit score, not a flawed plan. Missing papers. The paperwork requirements for an SBA loan are extensive, and most applicants find out what they're missing after they've already submitted, which means delays, resubmissions, and in some cases, automatic rejection. That is 10 categories of documents, and within each category, there are multiple individual items. This is not designed to discourage you. This is designed to protect both you and the lender by making sure the right information is on the table before a decision is made. But most applicants show up without half this. They get a request for more information, they scramble, the clock restarts, and some never finish the process at all. Gather everything before you apply. Do not start submission until the package is complete. Here's the truth about SBA loans that nobody puts in the headline. These are some of the best funding products available to small business owners in this country. The interest rates are competitive. The repayment terms are generous. The government guarantee means banks say yes when they otherwise would not. But the program is not designed to be easy to access. It was designed to be worth accessing if you are prepared. The business owners who get SBA loans are not necessarily smarter or more qualified than the ones who get rejected. They're more prepared. They started earlier. They gathered their documents before they needed them. They applied to the right lender. They knew which product fit their situation. You now know all of that. The only question is whether you start preparing today or wait until the moment you desperately need capital to figure out what you needed 3 months ago. 5 truths, all of them real, none of them in the brochure. The SBA does not lend you money, your bank does, with a government guarantee. There are 3 loan types, and most people only apply for one. The timeline is 60 to 90 days minimum. Plan ahead or get blindsided. Your business plan can carry your application even when your credit history cannot. And incomplete documentation is the single most common reason applications fail before a human ever reads them. Now, drop it in the comments. Are you considering an SBA loan? Tell me where you are in the process and what is holding you up. I read every comment. If this video helped you, hit like and subscribe. We do this every week. Real information, no hype. Before you disappear like your paycheck, take a second to check the description. I left you something valuable there. See you in the next video.